My name is Kristen Grismore, and this is my Go See It video for financial accounting. The company I chose for my inventory and internal control project is Starbucks Corporation. They're a Seattle-based company known for their coffee and other coffee-based beverages with over 28,000 worldwide locations. They use the weighted average cost method of inventory, which means that they take the total cost of inventory at all price points for an item and divide it by the total units available of that item to calculate the cost of goods. They also abide by the lower cost of market or moving rule, which means that an inventory's worth must shrink if the current market or replacement cost of a product is lower than the current company's recorded cost. A majority of Starbucks inventory is in coffee beans, with unroasted being the largest. They hold $588.6 million worth of unroasted beans, $281.2 million in roasted coffee, and they use signature roasts in roast their own coffee, which accounts for the large quantity of unroasted coffee. $273.1 million also is held in other merchandise such as reusable items or food items. They estimate future costs of products based on previous cost trends and fixed rates with coffee growers, which keeps prices relatively stable. Their inventory levels fluctuate based on seasonality and obsolescence. So during the Christmas holidays, certain blends of coffee might not be available because they're producing Christmas blends. And when they retire an item, those items will no longer be available. They make estimates each year for inventory reserves, a term including for shrinkage, obsolete, and slow-moving inventory, reserved currently at $41.2 million. As for inventory internal controls, Starbucks has a variety of controls to protect assets and promote efficiency. They use an electronic register, which automatically totals the cost of a purchase and eliminates math errors. Employees also have their own register logins to record who handles each sale, and they allow credit card purchases to eliminate the amount of cash being handled by employees. It limits errors with making change and employee theft. They also have scan codes for certain items, and they set prices programmed for drinks, which reduces the likelihood of processing errors when they're entering an order. Other controls include that managers only will have access to the safe or sometimes the entire stockroom. A majority of the inventory is behind the bar or in the back stockroom, which limits customer theft. All of the orders have specific directions which promotes correctness and allows the register to record usage of different items. Periodically through the day, the store will do an inventory or floor count to track usage and restocking needs. And a small amount of production inventory only is held behind the bar to promote drink efficiency. Company-wide, Starbucks is required to do an audit of their internal control systems in accordance with the Sarbanes-Oxley Act. This year, Deloitte audited the company and found their internal control systems to be sound